The answer is all of us. What's it going to take to change financial literacy in America? All of us. What's it going to take to change the generational wealth gap in America? All of us. That's real estate agents, that's parents, that's college professors, that's Gen Z, millennial generation, and the mortgage industry. And I'm super excited for today's episode because I have industry legend, friend, and influencer Greg Sher as the special guest. You're not going to want to miss today's episode. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and a very special guest. Originally from Baltimore, Maryland, he today hails from the DMV. He is a second generation broadcaster. He is a mortgage executive. He is one of the most influential people in the mortgage industry. He loves the Kentucky Derby as much as I love fantasy football. He is my friend, Greg Sher. Greg, welcome to the Loan Officer Podcast.
That's a hell of an intro.
I do it every time because this is how I'd want someone to introduce me every morning when I woke up, but I cannot convince my wife to do it for me.
Yeah. Well, listen, I'm very nervous because I feel like I'm going to disappoint. The shoes I have to fill, the guests that you've had on the last 3 or 4 episodes, these are titans of industry.
You are in good company. I'm excited to actually keep it rolling. What's crazy is people don't know this about the show, or if they're new to the show, they don't know this. If they're OG, we call them TLOPers. No, OG, they know. Typically, the show is me and John Coleman. Like, John's the producer extraordinaire. He's my co-host. He's the guy with the funny jokes. He's the guy that doesn't let me get away with shit. And he's the guy that asks the questions the audience really wants to ask. But occasionally, we'll bring on some guests. So we've had the Dave Savages and the Renee Rodriguezes and the Barry Habibs. Those are all industry experts. And we've had on some special guests like Phil Jones recently.
Amazing.
Who wrote one of my favorite new books, Exactly What to Say. But I've had on WWE divas come on and talk about empowerment, the women's movement and her story, and that was very enlightening. And today we get to have broadcasting, second generation, right? Ex-Ravens and Orioles pre and post game color. No, you were color.
No, I was a broadcaster on WBAL in Baltimore, which is where I grew up. So it's my hometown, 50,000 watt flagship station of the Baltimore Orioles, top 25 market. I was 26 and I was the sports director doing drive time. A lot of pressure goes along with that job, and a lot of preparation is necessary to last in that job. And I'll just come right out swinging, telling you that the greatest lesson I learned in life came from my greatest failure. And my greatest failure was as the sports director of WBAL in Baltimore at 26 years old. I was young, I was immature, and I did not understand and appreciate the value of preparation. I thought, like all the other radio jobs I had, I could just wing it. But I wasn't in a small town anymore. I was in a town where everybody hangs on to your every word. So, for instance, I got it wrong that a pitcher was left-handed when I said he was right-handed, but he was really left-handed. Like, you don't make those kinds of mistakes. That wasn't a Freudian slip? No, I didn't do my homework. Yes. So, I was demoted from sports director in 1997. Okay, big job for a 26-year-old. Like, there are only 5 of these jobs in the country in all these big sports markets. And I was demoted, turned into a weekend guy. They were very gracious in not firing me at the time. It probably had something to do with the fact that my father was a broadcaster in that market.
On TV, on radio?
On television. For many, many years. Okay. I've told a lot of people this, but he and Oprah co-hosted a talk show together from 1975 to 1980. That's where she got her start with my dad.
I was going to ask you, Oprah got her start in Baltimore, right?
She used to jog over to our house every single day. And, she was a fixture in my life growing up, and her and my dad remain great friends. He's 82 years old. But back to the story, I became a weekend radio guy, and I needed something to do during the week. It was 1997. My friend was 23 years old, making 75 grand in the mortgage business, and he's like, dude, you need something to do during the week. Look at my pay stub. Come on in. And I was like, I got nothing else to do, right? So I went in, and now I've been in the business going on my 27th year. That's literally, I remember the lunch we went to for him to pitch me on the mortgage business, we took out a napkin and he started talking about escrow and, you know, PITI, and it took me a minute to get that because I was really confused back then. But it's, boy, what an embarrassment of riches the industry has given me, you, and so many others. We're so fortunate to be in it, and none of us set out to be in it.
Yes.
That is what makes, what brings and has so much character in our industry, because we're all coming from different places and we all sort of accidentally got here.
I was going to say, like, my degree's in advertising. I worked in television advertising my first 3 years coming out of college, a little bit in Atlanta, a little bit down in West Palm Beach. And like you, a friend of a friend knew I was unhappy selling local TV ads because that's a pretty shitty sales job. I love selling national. I didn't really dig selling local. To me, it was the epitome of like used car sales, just wasn't my jam. But everything in life happens for a reason. And yes, most of us, we didn't wake up one day saying, man, mortgage loan originator, that sounds like a great career. Now, because of the advocacy that you do and some of the stuff that I do, I think the future of the mortgage industry, I think they are in college right now and they're able to find your content, find my content, and they're starting to think, oh, wait a minute, that's a career path? Maybe I should look into that coming out of the gates. But for those of us that have been in for 10, 20 years, 30 years, many of us have a backstory. Your backstory is really cool, and I didn't know it until today. Like, I knew you were second generation. I knew your dad was a broadcaster in Baltimore. I knew there was some kind of a connection with Oprah, and I knew you maybe dabbled in following in his footsteps, but I didn't know that you had the success that you had. I mean, that was a legit Monday through Friday gig.
No, I was in the cockpit seat of a very important job.
Wow.
So, I mean, I was on the broadcasting trajectory. In fact, when I graduated from University of Maryland way back when, my first job was working at a startup national sports radio network out of Dallas called Prime Sports Radio, which Liberty Media was the parent company of Prime Sports Radio. And we were on in 20 states, 20 cities, then 40 cities and 60 cities. I was doing talk shows with Major League Baseball managers when I was 25 years old, and then moved eventually to my hometown. And I just told you that story. But the moral of the story is that it was very embarrassing for me, because when I got demoted, I was on the front page of the Baltimore Sun. I still have the article. They didn't like me there because I was so polarizing. I broke a couple of stories. I didn't like that either. And, you know, I'm sort of still doing the same thing today, right?
Yes.
So,
and we're going to get into that in a minute.
Yeah, so the moral of the story is that I learned a really valuable lesson at a young age that I hold so close to my heart, and that is that you got to show up to things prepared. You've got to show up organized and ready to go. And so when I go to write an article or I have an opinion, I'm summoning both my experience as a journalist, which is in my blood, it's what I love, along with that reminder in the back of my head. Give the facts. Like, if you're going to start stating statistics and things, don't make the same mistake you made as a broadcaster when you were 26 years old. Do your homework. And so that's kind of what I carry around with me today. I always try and be prepared. I always try and show up to things a little bit early. I was early today. You were late.
I was not.
You said be here at 12. I was ready. I told you 11:58. You said, you know, we need to start this at 12:20. So did I just expose you? No, you can't be exposed.
You can expose me. There's a lot of skeletons in my closet that I try to keep in that closet. But one of those skeletons is not the fact that I struggle with. It's not even like I am being rude, but I'm not doing it intentionally. I try to squeeze too much in. So God gave us 24 hours in a day. I try to get 25 hours worth of commitment in a 24-hour day. And that sometimes means that I miscalculate how long things are going to take. For example, I'm like, oh, it's only a 25-minute drive to get there.
Yeah.
But I forget it's 5 minutes to leave the building to get to my car. And then it's another 5 minutes to park my car and get back into the new building. So I just added 10 minutes to my time frame, but I only allocated for 25. All of us, I love the t-shirt that you're rocking. So if you're listening to this on Spotify or Apple, go over to the YouTube channel because you can see Greg's shirt. Plus, the YouTube channel is the jam. It's where we have a ton of additional content, not just podcasts. But go over to the TLOP YouTube channel or the Loan Officer Podcast YouTube channel, and you'll see Greg's shirt. But he originally debuted this shirt at Housing Wire's The Gathering. And you had a red one and you had a blue one, but it's hashtag all of us. Let's talk about, what does all of us mean to you, and what is the all of us movement?
Well, all of us is really, you brought up some things in the beginning. All of us when it comes to financial literacy, all of us when it comes to educating our referral partners, yes, totally. Look, there's a lot of rally cries for all of us, but the genesis of it was this divide between mortgage brokers and lenders. And it all started with the movement that came out of AIM, which was brokers are better. I think we've all heard this thing, brokers are better. And
I've talked about it on the show.
Hey, the timing was good. You have to give credit where credit is due. It was a genius marketing ploy.
Phenomenal.
Yeah.
Phenomenal
marketing. Amazing. Yep. It got traction. The timing it was like the perfect storm. And right around the time it picked up, rates started to tick up too. And so people needed something to fall. They needed religion. And that was brokers are better. Fast forward now to 2024, we've got a lot of headwinds. Clearly there's so much going on, and there, to some degree, there are always headwinds in our business, right? And today's headwinds always feel like the most insurmountable ones, and I think today is no exception. Of course, we'll get into some of that stuff, but the genesis of this was this idea that brokers and lenders are fighting for the same thing, and that's the consumer, right? We're all serving the consumer. Where did we fall off that we want to create this idea in the marketplace that one vertical that serves the consumer is better than the other vertical that serves the same consumer? We look like doofuses, right? And so my thing is, let's retire brokers are better, and let's rally behind this idea of all of us, that when we're united for the purpose of serving the consumer, we're aligned, right? Like we have one vision, one purpose, one goal to execute. But then I think out in public, people underestimate what it's like for a consumer. You can imagine being a consumer and getting a quote from a broker who on the back of their page, they go to their website, brokers are better. And then they go over to the lender side and now they want to know from the lender, well, why does that say brokers are like there's enough confusion already out there, right? And so I think there's going to be even more confusion post NAR settlement, mid-August. So to me, it's like, okay, it was brilliant. Congratulations. Tip my cap to you, broker people. Let's put it over there and let's get back to working together. And that's how all of us came to be.
So yeah, a couple comments on that, because I'm a dude who my degree is in advertising and marketing, right? Part of that, I did 4 years of video production. I love sales. I love marketing. I love entrepreneurship and owning and running companies, but I'm definitely on that sales side of things. So I love words, which is probably why I love Phil Jones's book, because that to me is very much word porn.
That was a great interview.
Yes. Thank you.
I really enjoyed it. He was excellent too.
He's phenomenal. And there is someone in my local market. So I'm in the Central Florida market, and this was 15 years ago. He launched his company. It was very successful all the way up until the downturn. And now they've basically disappeared because they were very consumer direct. They were very refi heavy, and that business model, as you know, is profitable, but at the same time, until it's not. All that said, I loved what he did because he came out on radio ads and he says, I'm a direct lender and I do no lender fees. And he made that sound special. And at the time, this was before the big broker movement. So literally mortgage brokers had less than 10% market share, at which point 90% of lenders could have said they were direct lenders. And any one of us throughout my 20-plus year career can do a no lender fee option. But this dude made it sound special. And therefore, all of a sudden, when you went out and made sales calls, realtors and builders and consumers alike would ask you, well, are you a direct lender? I'm like, well, yeah, but I kind of took that for granted because 90% of us are direct lenders. Well, and do you do no lender fees? I'm like, it's one of the 3 options I'm going to show you. But this dude made it sound special. And yes, the AIM movement and the brokers are better movement, timing played into it, but it was like, wow. It called on, and I have to give credit where credit is due. However, running this show, which by the way started as a passion project, right? It was me being bored, wanting to have fun, and also wanting to take what I was already doing for about 48 loan officers and about several thousand consumers and 200 to 400 realtors and say, well, let's just not keep this all a secret and let's just put it out for the masses to be able to consume and enjoy. But through it, I had the opportunity to field questions, career questions, and questions about what I love about the mortgage industry, et cetera. And I always get, well, wait, which route should I go? Should I go work at a bank? Should I go work at a credit union? Should I work for an IMB? Should I go work as a broker? And my answer is yes. Because I have never felt one is better. Now, I think that all of us have different preferences based on our personality profiles, based on our requirements, where we are in life. I have, like you do, plenty of friends that started Consumer Direct that are now top producers for an IMB, right? I mean, you have one in the Ohio region, right?
Daniel Saw
crushes it. Who has started as a direct lender. He didn't stay there, but there's others who may stay in that direct lending space. Consumer Direct, they own it, and they do it for 30 years. There's people who left banks to become brokers, left brokers to go back to an IMB, and I've never felt like, no, neither one of them is better. There's personal preferences. There's seasons in life, seasons in career. And at the end of the day, it's like what I tell my 19-year-old son all the time. Do you, homie. Like, you got to do you, and you have to find what's best for you. But for you to tell me that something's better, I actually take offense to it because I freaking love our industry. I love what it has provided for me, my family, and what it's allowed me to do from a creative standpoint. And I'm like, quit telling me that one way is better than the other, because it's not fair to my buddy who works for a bank who crushes it, or my friend who works at a call center and crushes it, or my friend who runs his own broker shop and crushes it, where you and I choose the IMB route, and we would argue we crush it. We have friends who crush it, and I may open up a Scotsman Guide. And there's a lot of people that work at companies that are a lot like ours that crush it. So anyhow, thanks for bringing that up. I didn't know that was the angle you were going, because honestly, I thought that all of us was less about broker versus banker versus Consumer Direct. I thought it was more the mortgage industry and the real estate industry post NAR settlement. This is our opportunity to truly come together as one.
Well, I think there's a lot of tentacles to it.
Okay, I like that.
But it started with just retiring brokers are better. I think when you look at the broker-lender space, the pendulum has swung so dramatically over the years. Brokers are in vogue. Oh, wait a minute. No, they're not. There's less pressure on rates. Now lenders are in vogue. Oh, wait, there's rate compression. Brokers are in vogue. And it's just continued to seesaw back and forth, where one has held a historically larger percentage of market share than we're used to, right? This feels like a different moment to me. And I give UWM credit, too. Because in the past, when selling against brokers, I think you probably said this because you're one of the best salespeople out there, and certainly one of the best business development recruiting people out there. So you can relate to this, where someone's like, well, I'm thinking of going broker. And you're like, well, but if you go broker, you're not going to have control over your files. You're not going to have good technology, good reporting. You're going to have no visibility into anything. That's really changed now.
Yes.
I mean, so now it's better than it's ever been. And so because of that, I believe that we're now in a world where the pendulum's not going to swing. It's going to settle right down in the middle, and we all have to get used to this idea that lenders and brokers are going to exist. And it is great for the consumer, right? But we just need to couch it the right way. The more quotes you get, the more competition, the better deal the consumer gets. All that's good. And I think we need to reframe the whole thing.
I like that. I'm going to switch gears on you a little bit. Where do you see the future of mortgage lending going? Like, we're 2024, right? We're halfway through the year, almost halfway through the year. We have a few weeks to go in June before we're officially halfway through. So we have to get through the end of this decade and then into the 2030s. When you're forecasting out, obviously I know the further out we get, the cloudier that vision becomes, but how does Greg Sher prognosticate the future of mortgage lending?
I think that it's not a one size fits all answer, and I've got experience in the first part of the answer, and then I'll give you the second part of it. I think that getting to the consumer earlier on in the funnel is going to be, critical, vital. Having your own brand, right? Being able to drive in business through engaging on social media, because the fact of the matter is the generations that are coming up, they are digital natives. The first ever population of digital natives is Generation Z. They're on the phone 3 hours or more a day. And that's how they behave. That's how they act. And we've had real life examples of that at NFM through our influencer division, which we launched 3 years ago.
Thank you for getting into that, because that's going to be my follow-up question.
Yeah, so
but go ahead.
I've got 12 influencers, and these are people that are employed by NFM, licensed by NFM. They've got self-generated real estate business, but they also have a focus on their persona, branding on TikTok, Instagram, and these other things, where they're putting education out into the universe. And in the 3 years since we launched that, we've driven in no less than 70,000 exclusive organic leads.
That's amazing.
So,
and 3 years ago, was this your brainchild?
It was, yeah.
Your brainchild. What What transpired, or what did you see happening that you're like, wait a minute, there's more here than just one person being an outlier?
What happened was, and you can appreciate this since you're in the business development game, is there's a guy named David Stallings, who worked at Homestar for many, many years out of Georgia. He's a monster producer. Him and his cousin Michael Stallings, they're $700 million a year, pretty consistently. And I had recruited David years ago, but it's one of those situations where, in business development and recruiting, sometimes people come, sometimes they don't, and sometimes you develop the greatest relationships you've ever had with these people, but you never work together. That's who David Stallings is. So like 6 or 7 years into the evolution of this relationship, and this was in 2020, he said to me, hey, buddy, you got to check out this guy, Scott Bentley, online, known as That Mortgage Guy on TikTok. And I was like, okay, what's TikTok? How do you even spell that? And literally 3.5 years ago, I had no clue. He's like, here's how you spell it. And this guy happens to be in your backyard in Maryland. Check him out. So I went on to TikTok. I looked at his profile. I saw that on some of his videos, which were short form, 8 seconds to 15 seconds, he was getting upwards of 1 million views.
Wow.
Okay. Now, not only was he getting 1 million views, but then you go into the DMs and you start to see people with these questions, like leading, closing questions. Can you do loans in Florida? I'm self-employed. Is that okay? I've got a job gap. So all these different things. Can I have a non-owner-occupied co-borrower? And so the light bulb went off, and I thought, oh my goodness, this is a glimpse into the future. And because I have a broadcasting radio background, and you see the marketing side, and you can appreciate this, having been in sales and in that arena as well. Like, I saw this as, oh my goodness, I think he's on to something that looks a lot like the future. So a little bit of luck, right? A little bit of it was a hunch. So I called Scott.
Intuition. Yeah,
I called Scott. I brought him on. Fortunately, his lender had no appreciation for what he was doing. And I said, what you're doing is the future. We should bring you to NFM, build something sustainable out. I'll make you the co-founder of this and co-creator, and let's take off. And so that was the beginning of it, and we drove in all those leads.
Does he now work with other originators within that division, or even outside of that division, to teach them some of the basics of what he does?
Yeah, and real estate agents. So we have every 6 weeks we throw something called Social Stage, where we bring in all of our referral partners, and we've got leaders in the influencer space that come on, and for 75 minutes, we talk to our referral partners, from a leading real estate agent influencer and a leading loan officer influencer. We talk about, how do you build a brand? Where do you begin, right? And so I've learned a lot from that. So that's one part of the question, is getting to the consumer earlier. The second part of the question is becoming an expert when it comes to financial literacy. So you look at the Dave Savages of the world and Trust Engine and sort of this predictability model, I think, and then what Brian View is doing at FinLocker. Like, you have got to be...
Both have been on TLOP, by the way.
I'm not surprised.
So, yeah.
You have to be prepared to meet the consumer where they are earlier on in the funnel. And I think this is a fundamental change that IMBs need to reconcile with right now, right here today. And very few, including us, quite frankly, let me just expose it's a lot of work. Nobody's prepared for this. Like, IMBs are used to a couple of questions. How many leads are coming in? How many files have opened? And is there a predictability to when these loans are going to close, so I can count on my revenue and we can move on down the train tracks? This is a completely different animal. This is, are you built to take a consumer in and put them in a funnel that you can depend on, where they may not close for 6 months, 9 months, a year, 2 years. Yeah. So it smacks in the face of what tradition looks like. But this is the future, folks. Like, you see an influencer, you see something, you're 23, you're a first-time home buyer, you're like, okay, let me raise my hand and get involved in this process now so I can be ready when I'm 27. Like, that's a completely different
You know who did
animal.
This, unfortunately, the best back in the day? Big Tobacco. Big Tobacco. Candy cigarettes. Candy cigarettes to start introducing the youths, or if we're watching My Cousin Vinny, the youths, to
great movie.
Cigarettes. Love that movie. Love them. And I have a mild crush on Marissa Tomei. So I watch that movie often, over and over and over. Still. I even saw the 58-year-old version of Marissa Tomei the other day on whatever I was watching. I'm like, yep, she's still an attractive woman.
Still, yeah.
But nonetheless, Big Tobacco did that. And what I hear you saying is that we have to understand that aspect of the future when it comes to serving millennials, Gen Z, and the generation behind them, that we need to get to them sooner. We need to have the right technologies, the right incubation strategy. And it's not a matter of get lead, pull credit, and 90 days later get a paycheck. It may very well be create content, build rapport, create more content, build trust, create more content, get them to like you. And then they reach out and say, I'm ready. Thank you. You've taught me everything I need to know. And I'm like, I don't know who you are. I mean, this is so cool about content creation. And you know this, and I know this because we've been embracing it for a couple of years now. But I was just recognized with a super awesome
congratulations
recognition through the Florida Banker. Yeah, it was long story short.
It meant a lot to you.
Yes.
Yeah. And I could see that from your post that this really hit home. And it wasn't the title or the trophy or anything like that. It was just, there was something so much more profound for you.
It was the recognition and knowing that that's the most special award. Right? There's awards for, this person helped bring on the most members or raised the most money. Okay, that's I don't know, that's like a sales competition. This is you've been recognized as your peers as being someone who really impacts our industry. And that's what we don't hear enough of is the thank you or the good jobs. And I'm someone who needs good job and thank you. Believe it or not, as gregarious as I may be or the bravado may be there, it's still a front. There's still a little kid inside crying, please like me, please pick me. So yes, it was something like that. But nonetheless, we were down in Sarasota. Now I've totally lost my train of thought. Talking about being an influencer, talking about the future of the mortgage industry. And
we were talking about getting to the consumer earlier in the process and this idea that, and I'll take it a step further, while you collect your thoughts, you had said, the IMBs and mortgage companies should identify a strategy. I'm going to go a step further and say, if you look up in 3 years, you're going to be halfway on your way to extinction if you don't have a strategy. I mean extinction, like you're not in business anymore. Yeah. 5 years, you don't have a strategy for getting to the consumer earlier on in the process, you're finished. You're really finished. Like between what AI and all that modeling can do and the power of the consumer that's coming up, right? Like they don't go to Google, right? We still go to Google, but they don't. They go to TikTok to figure out that's their Google. That little window up there at the top on TikTok and Instagram, that's where they learn and that's where they end up following people. And that's the future of, I think, the mortgage industry, to your question.
Yep. So I would summarize what you said, and I still have a total brain fart. So guess what, y'all? I just saved you another DO rabbit hole, so you're welcome for that. But I do view the future of the mortgage industry as being the first time in my 20-year career history that we are going to marry the online lead with the offline lead.
We're going back to direct-to-consumer in some ways. You know that.
Yeah, that's what I mean. Like it used to be you're either dominating consumer direct to where I've dabbled in consumer direct, and even the little bit of it I dabbled, I've realized early on I needed 2 separate CRMs, I needed 2 separate salespeople, I needed 2 separate everything because it was truly a different sales process. I don't see that as much in the future. I see that being, if you are consumer direct, technology is going to allow you to become that advisor. Technology is going to allow you to leverage relationships in your local marketplace and create referral sources. And good leaders like maybe this dude, you and I, can teach those consumer direct originators how to be less churn and burn, smile and dial, and how to become advisors, because Brian's technology and Dave's technology is going to help them do that.
Yep.
Our mentorship is going to help them do that. But then you take the traditional mortgage banker who's purchase focused, realtor, builder, past client referred. They love their CRM and their database. And we're going to have to show them that, hey, look, continue doing that. But 20% of your focus that used to not be 20% of your focus has to be content creation, reviews, website. How are people seeing you? Because I do believe the consumer of the future will listen to the realtor. They will listen to their divorce attorney or their financial advisor, but it's going to be yeah, but let me go find that person online. And if they can't find you online, you're stuck in purgatory. I'm not a very religious person, but what I understand is purgatory is not a fun place to be. At least go to hell and go hang out with the heathens, right? At least go have a good time with the train wrecks and the criminals.
Yeah.
Or go to heaven. But purgatory is kind of like, man, nobody wants me. And you don't want to be stuck in purgatory from a sales and marketing standpoint.
Well, people are going to age out in this business too. And so if you're a 57-year-old originator, you're not going to want to pivot probably to get into influencing. And
you might not need to, right? If
you might not need to. Yeah, no, you're still so years, like when I say that in 5 years you'll be, extinction, that's to say that if you're a company that has no strategy. Now, of course, there are going to be outliers. So I don't want to suggest that someone can't survive, but you're going to have less business likely unless you're in a very small town and you just own the market. If you do that, congratulations, you do have more longevity. You are an outlier. The issue is if you're in any kind of a big metro area, real estate agents are losing market share every second to real estate agents who are out there building their brands.
Yeah.
And so it's like you said, like you've got to have, you have to have some kind of an online presence. It's no longer a badge of honor to be like, I don't believe in that, I'm not going to do that anymore, because we're officially in a world where if you don't have any online reviews, people don't want to do business with you. You got to come to reality that that's a fact.
So I was out at Mastermind Summit and I got to speak on the main stage, which was a cool experience.
Yeah, how was that?
Really good event.
Were you nervous at all? At all?
Full disclosure?
Yeah.
Yes, it's no different than
it's nerve-wracking, isn't it?
To me, I equate it to that first at bat of a game, or I used to be on the kickoff return team on football, and yeah, you get those fun, excited, nervous butterflies going. Now, once the ball's kicked, once you smack that opponent in the face, or you get smacked,
you get into your groove. But how long do you think it took you until the hearts came down a few levels?
The minute my foot touched the step, I gave Kevin Ducey a hug, and I said, "What's up, Las Vegas?" It was go time. Behind the scenes, breathing exercises. Let's wrap up on mortgage, right? Because I the last mortgage question I asked you was kind of give us your thoughts on the future of mortgage lending, and I think you did a really good job of that. I want to somehow bring up this topic because it's something that I don't think you know about me that we share. And not we Greg share it, but we do. We kind of Greg share it, but we Dustin and Greg share it. Okay, see how I did that? Dave Stevens. What did Dave Stevens mean to you?
A lot.
Yeah.
Yeah, he meant a lot. He gave me a lot of his time. He's very generous. I don't know if he took me under his wing. I think there are a lot of people that feel like he took them under their wing, and he never said, "I'm going to take you under my wing," but you just had a feeling the way he talked to you, and he was so great at developing deep relationships and positioning people to be the best versions of themselves. And I've heard that over and over again from people inside the walls at the NBA. He took me and I was doing this, and then he put me on this track, and my career blossomed. He just had this gift. He was a giant.
Yeah.
And so that's what he meant to me.
Yeah. For those that don't know, Dave Stevens passed away this year after a long battle with cancer. But Dave was a who's who in the mortgage industry. Like, he started as a sales rep. He worked his way up. He had several C-level executive positions. He then was appointed by the Obama administration to be the secretary of FHA. He then later left that, and he was the CEO of the Mortgage Bankers Association. Just a wonderful advocate for our industry, but a real human being. And I don't know if you know this about me. Dave was my CMB sponsor.
I did not know
Dave
that.
Stevens was my CMB sponsor. And what's really cool that I think you'll appreciate about the story, and there's an underlying story to the listeners, and it's about shooting your shot. So this story is going to be about shooting your shot. Imagine having this guy in the industry that it'd be rare that if you met someone else who's a leader in the industry who knew Dave, that didn't be like, I looked up to him. He meant something to me. I loved what he did for our industry. He's that type of a guy, one of a kind Hall of Famer, right? So he was that guy that he and I, easily 20 years apart, I looked up to. He didn't know I looked up to him. He had no idea. I saw him speak once. I maybe shook his hand once and met him. But it all started with me being a young producing branch manager. And this was during the 10, 11, 12 time frame. And we are financing a ton of REOs, right? Mm-hmm. And FHA comes out with a mortgagee letter like they always do. And it's talking about not being able to do property flips, that are less than 90 days. But in there's an exception for if it's a bank-owned property. Well, at the time, my VP of operations was telling me that we couldn't fund a loan because it's a property flip. Like, this is not a property flip. This is a bank-owned property. Well, as it goes, I'm advocating on behalf of my borrower. She's advocating on behalf of the company. And I said, well, fine. We're going to fire an email to the guy who signed his damn name to the letter. And we sent a letter. My partner, David, sent the letter, the email. Dave Stevens, who at the time, Secretary of FHA, responds at 2 a.m. within 24 hours of us sending it. Now, Dave didn't answer it. He may have signed his name, but someone else would probably checked over the policy. He got us the answer. We were right. We advocated on behalf of the borrower. Since then, I was like, I want to follow him. So then he later becomes the CEO of the NBA. I'm a huge advocate of anything NBA, your local chapter, your state. And if not NBA, the FAMP or NAM, like, just be involved. Give a damn about your industry, regardless of industry. If you're a realtor, maybe it's NAR or maybe it's Women's Council of Realtors. If you're a financial advisor, find your group, right? Find your people, be a part of it, give back, advocate, all that good stuff. So yeah, so I just fell in love with the professional. So here's where I shot my shot, and here's where you can maybe get some motivation from this. So we don't know each other. In order to become a CMB, you have to do a lot of things. One of those is you have to find a sponsor. And I'm a little bit of don't lack confidence. So I want to bet on myself. I want to believe in myself, and I'm going to do it. I'm like, I don't need a sponsor. Like, I got this. I'm going to study my butt off. I'm going to do what I have to do, and I'm going to become a CMB. So then I'm like, I'm going to use my sponsorship to connect with someone that I admire in the industry. And in order to become a CMB, your sponsor has to be another CMB. I crafted, I'm sure I can find it somewhere, a LinkedIn message, and I shot my shot. A LinkedIn message where I sold him on who I was, what I was doing, and why I wanted him to be my CMB sponsor. He was on a safari, retired, by the way, and had already had his original cancer diagnosis, because that's when he stepped down from being the CEO of the NBA. He responded, hey, I'm on vacation with my family doing a safari. I just want to let you know, I'm going to make a terrible CMB sponsor, but your pitch is too good for me not to say yes to.
Wowzer.
And after that, it was lights out. And that was my opportunity to at least have conversations with Dave, to have emails with Dave, to get text messages from Dave. And I got to know him. And probably like many, I didn't get to know him as well as I wanted to. Right? I didn't get that opportunity. We never worked side by side. We didn't collaborate. We didn't have a one-on-one dinner. But I at least can say, like, I got to know the man as a professional, and I got to ask him some career advice. And he gave me this one piece of career advice that, again, I want to share with the group because I had never received this. I've received grind it out. I've, head down, blinders on, treat people like all the normal advice. Dave was the first person to give me this piece of advice. He said, be willing to take risk. And I'm like, well, no shit. How do you think I got to where I got, Dave? Like, I'm a risk taker. Ask my wife. Like it keeps her up at night sometimes. He's like, no. He goes, you make good money? I go, yes. He goes, you make great money? I said, I think so. He's like, cool. Be willing to make 1/10 of what you're making today if it means you get to gain experience, connections, and exposure to later opportunities that will bring you that same type of money times 2. What I think he was telling me to do is don't be afraid to go work for the GSEs. Don't be afraid to go work for the NBA. Don't be afraid to go work on Capitol Hill.
Or public service, which you do.
Or public service.
Yeah, you're into
right?
that.
And for me, I took it for what it was. I'm not ready to do that yet, but maybe in 10 years I will be ready.
I think working for the award you just won, I mean, that's public service, isn't it?
That is public service. Yeah.
That so, is that's me giving back.
Yeah. But sure. Anyhow,
great story. Thank you for sharing.
Dave's someone who I know means a lot to you. He's someone who means a lot to me. Our industry there's a massive void filling, and this is what I want you to talk on last. There's a massive void left because we don't have a Dave Stevens. Dave was raw. Dave was real. Dave was on point, and for the most part, Dave was accurate. It was hard to read or hear him and be like, nah, dude, you're full of shit. We were normally like, dude, thank you for saying that. What are you trying to do? Where do you think we as professionals in this industry can step in to try to fill some of that void that Dave leaves behind?
That's a great question. Let me start by saying that he did the work of 10 men, 20 men. So he is irreplaceable.
20 men, which is only 8 women, but it's okay.
Yeah, I mean, just 20 people, 40 people, 80 women,
yes.
2 men, whatever it is. Like, the point is he did the work of a small army. And so I think the only way you can potentially come close to measuring what he did is to amplify the voices of all, right? And so right back to all of us, right? That kind of blankets this idea that all of us are stronger together, and we just have to figure out what we're passionate about, what our lane is, and you need to speak up. If you see indiscretions, if you see things going on culturally at your company that don't line up, right? There's something recently that just hit the wire about that at a particular IMB. Not going to mention any names, but just speaking up about things that you're most passionate about, whether it's consumer facing or industry facing, whether it's legislatively, because there are a lot of efforts going on behind the scenes. Trigger leads, for instance,
yes.
Like that's an example where the more of us that can, click and let our representatives know that this is an important bill to us, that's another example of how we can all sort of rally behind the industry one by one, and brick by brick, potentially we can try and come within, half the levels that Dave Stevens was able to get to on his own.
Awesome. 3 last questions First one, this is a common theme because this podcast, although called the Loan Officer Podcast, I don't want it to be for loan officers. This is loan officers teaching life lessons that they learned because they became loan officers. This is the shit they don't teach us in school, right? So I tell people mostly, like, tune into the show if you're looking to buy a house, if you currently own a house, if you sell real estate for a living, or if you finance homes for a living. Because if you're fitting in one of those categories, then this show is for you. But we call it the Loan Officer Podcast because it's essentially what I learned because I became a loan officer. Okay?
Makes sense, yeah.
So,
and I like the logo and the colors.
Thank you.
You did well with that.
You can thank John Coleman for that. I do not have that artistic.
JC is just all over.
He's a cool cat.
Yeah.
He is a cool cat. So what is something that you wished you learned earlier in life? And I know you told the one story that you learned about preparation, but is there something else that when it comes to whether it's financial literacy or whether it's just being less of a mess as an adult, what is something that you wished was taught to you earlier in life? Something maybe you're teaching your boys right now.
That's a great question.
Some sage advice to young Greg. That's what we're looking for.
Sage advice to young Greg.
I mean, not that you're old today, but just the younger version of you.
Be confident. Believe in yourself.
I love that. Believe in yourself because that's the one person you can count on.
Believe in yourself because, and you know, this, I do look through the world through this lens of my child who's now 14. And I remember when I was 14, what a confusing time that was for me and how I wanted everybody to like me and I wanted to feel like I was cared about and accepted. And I think that I carried that doubt on my shoulders longer than most. It took me until I got out of college to really get some wind beneath my wings and start to believe that I had a purpose in this world. And so, that would be my advice: is to bet on yourself, have confidence, let out the power of positive thinking, right? Like think positively about yourself and don't be so concerned with what people think and how they feel about you. It's easier said than done for sure. But if you're not willing to bet on yourself and believe in yourself, then it's going to be a longer road. And it took me a long time to realize that. Awesome. Well said, by the way. If people want to find you, what's the best way to connect with you? LinkedIn. That's it. Yeah. GREGSHER. That's that easy. Yep. Greg Sher. Perfect. If somebody wants to find out more information about your influencer division, because maybe they're another executive and like, damn, I want to pick Greg's brain because maybe I want to do that. Maybe they're a loan originator or a real estate agent that are like, damn, tell me more about that. What's the best way to find out more information about the influencer division that you've launched over at NFM Lending? I mean, I'll say this, much like Dave Stevens, I answer every single message, every single DM. Anyone that reaches out to me gets a response. So I'm likewise, by the way. Yeah. Likewise. You and I share that too in common. Yeah, so LinkedIn then. Reach out to me. We can set a 15-minute appointment, a 30-minute appointment, an hour appointment. Like I'm open. I'm in the legacy phase of my career. So I'm 53, about to be 54. I'm done holding secrets. I'm done thinking, my shit doesn't stink or I've got something no one else can have because of this or that. I'm at this point now where all the chips are on the table and I want to lift as many people up as I can personally. Amen. So call me, reach out to me, whatever. My number's on my profile. You know what's interesting about that? Total sidebar, but the number of times that I hop on a call with a listener or a viewer, a fan of the show, a fan of what we do over at TLOP, and they're like, oh my God. Well, first they always say, it's really you. You sound like you do. I'm like, yeah, I do. I've sounded this way for since, I went through puberty and my voice changed. Yeah. This is really me. But sometimes I'm like, look, I got your message on LinkedIn. This is a 5-minute phone call or it's 17 minutes of me going back and forth with you via text. Maybe we're not picking up what each other's putting down. I'd much rather call somebody because like you, I want to help shape the future of the mortgage industry. So I tell people the same thing that you tell people. Look, LinkedIn, first name Dustin, last name Owen. Hit me up, follow me, connect with me. Obviously, if you're tuning in because you're friends with Greg or you follow Greg and he was promoting this episode and this was the first time you tuned in, hey, thank you for getting this far. This was one of our long ones, but it was a good one. I promise you that. Do me a favor. If you like what we're doing, go to YouTube and subscribe. That's how I can check off, are we doing well? Is our YouTube channel growing? So we're right now on the cusp of hitting 20,000 subscribers. That's a really big accomplishment. Trying to get to 30, on our way to 100. Like, true story. Like, those are the goals I'm putting out in the universe. So each and every subscription actually matters, right? Every drop in the bucket matters. If you are a mortgage loan originator and you want a really awesome, easy to read newsletter,
I have a newsletter that I write every single week. It goes out every single Tuesday. This is not ChatGPT. This is not something done through a spammed, canned marketing company. You can go to our website, tloponline.com. On the top of it is where you can subscribe for the newsletter. Obviously, subscribe to YouTube or continue tuning into Spotify, Apple Podcast, or wherever you go to listen to podcasts. Just do us a favor, give us a 5-star review and share it with not one, not two, but 3 people, because sharing is caring. And then the last call to action, if you are a mortgage loan originator and you're missing your community, you may be feeling lost or scared, and you want to come learn from top producers, let me invite you to come be a part of the TLOP MLO coaching community. Bang for buck, dollar for dollar, most value given in the industry. I'll bet my life on it. That let us come help coach you, train you, offer you sales tips and marketing ideas at a very affordable investment. All that information is also found on tloponline.com. He is Greg Sher. I'm Dustin Owen. You've just tuned in to the Loan Officer Podcast. That is all the time we have for you today, but we do look forward to catching you on the next episode.